You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Bootcamp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Old trading walks into a bar. New trading raises it. Unlike some guys, TastyTrade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, TastyTrade's got the most advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named TastyTrade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/ride with us and see for yourself. TastyTrade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Fall in boot. It's time to get into peak options trading shape. It's time for Options Bootcamp.
All right, everybody. That music means we are back once again. Time for a little bit of Education Wednesday. Yes, it is time once again for Options Bootcamp, what the cool kids call OBC. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you here, if you want to get the full kit and caboodle, including a double header of OBC in your ear holes immediately today. No waiting for next week to hear the second episode. There's only one place to go to do that. Theoptionsinsider.com/pro is the place to go. That'll also get you access to our awesome pro Q&A sessions. Just came off a hot one yesterday with our buddy, Mr. Scott Nations. You know he's big on vol. We went deep into vol on that one, so that was an awesome one. Also got options oddities coming up at the end of each week. We had a spicy one last week with our buddy, Mr. Matt Amberson, who's been on this show many times. Here, he's already talking about closing out some of the trades. He sent me the notifications. It's been wild on options oddities of late. If you're missing options oddities alone, man, you are missing out, let alone the pro Q&As and, of course, the live streams and everything else. Only one place to go to get all that, including congratulations to our pro member, Joe Lewis. You won the Pro Trading Crate bestowed upon you by one black-hatted one himself, Mr. Dan Passarelli, on the Monday episode of the Option Block. So if you want to get your name in the hat for those giveaways, all sorts of awesome stuff, only one place to go. Theoptionsinsider.com/pro is the place to go to join all the fun. And speaking of fun, it's usually fun until this guy shows up. None other than the black-hatted one himself. He's the kid from the old Peanuts cartoon that would show up with the dark cloud over him. None other than Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show, sir. Were you a big fan? Could you relate to that old school Peanuts cartoon, sir?
Are you commenting on my hygiene, Mark?
I didn't say you were Pigpen. Wasn't there a kid with like a dark cloud over him all the time, too?
That was Pigpen.
Was that also Pigpen? All right, so yeah, I guess I am commenting on your hygiene. It's a twofer. It's a twofer. Yeah. Dark cloud, and let's just say a healthy aroma follows Mr. P around wherever he goes.
Yes.
Speaking of where we're all going right on into a little bit of the old options drills.
Well, in boots, time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, let's get down to business, listeners. And you know what? Business is good. If you believe the numbers, that's kind of the focus of today's options drills. We just got the numbers in our hot little hands from our friends over there at the Options Clearing Corp. And it has been an ongoing debate / discussion of what the hell is really going on in the options market. We all know, of course, the pandemic drove a lot of retail folks into the world of options. And then it seemed, in particular, last year, right around this time, actually a little bit earlier, it was January of last year, I was asked to do the annual options panel at the Securities Traders Association of Chicago, aka STAC. Say that 5 times fast. So it was myself, it was our buddy the Flow Master, it was JJ from TD. I also had our buddy Greg from the Crypto Rundown on there. Kind of got a broad perspective on the world of options and derivatives. One of the interesting trends coming into the start of last year was, of course, the strength we saw in index options continued. The 0 DTE explosion continued to kind of carry the business. But really, if you took that out, the rest of the business was kind of flat, in particular equity options, which had been the focus back in the 2021 retail boom, the, call it what you will, the meme stock explosion. All of that was on the back of single name, really, retail trading. In fact, in 2021, the 0 DTE as we know it did not exist yet. That wasn't until 2022. So it was an open question whether maybe that was starting to recede. And in fact, if you took out a couple of days in 2023, equity options were actually flat to kind of down. So it was a little bit disturbing. We have the numbers, obviously, for 2024, and we saw once again that that trend had reversed and that single name equity options were lighting the world on fire. And now here we are coming into the beginning of March as we're recording this, listener. So we have the numbers from February in our hot little hands. And is that trend continuing? Do we have a weird aberration? The answer is yes to the trend continuing. No, we do not have a weird aberration. I was joking with the Flow Master on the option block last week. It seems like the new barometer, the new baseline for an typical month is now about 1.1 billion contracts, which again, just saying that out loud sounds insane. When Dan and I first got in this business, well, Dan got in, way before me. But when Dan and I first got in this business, the entire industry wouldn't even put up 1 billion contracts. And not that long ago, pre-pandemic 2017, 2018 into 2019, the entire industry as a whole, which had grown quite a bit, was still doing around 3.5 to 4.5 billion contracts in an entire year. Now we have, even in quiet months, yes, spoiler alert, and short months, February, obviously one of the shorter trading months of the year, still putting up 1.1 billion contracts in February. Dan, when I say that kind of number out loud, 1.1 billion contracts in a historically short trading month like February, what leaps to mind, especially compared to when you first got into this game, sir?
Yeah, man, it is incredible. It's just, I remember when I was working for the CBOE in their Options Institute, and I don't even remember what the numbers were, but it seemed like, you break 1 million or a couple million, it was a big deal. Or maybe it's 10 million, but still, it's just like, it's incredible. And it's exciting too.
It is exciting. We are clearly excited here, listeners. Let's break down some more of these trends because it is kind of interesting to see just how much things are evolving year to year. Year or two ago, it was all about 0 day. Now that story shifting somewhat. Right now, February, like I said, 1.1 billion contracts. How does that compare to last year? It's up about 15.5%, almost 16%. 975 million last year, which in and of itself is a banger February, listeners. 1.12 billion contracts this year. A couple of highlights here. index options, which have been the kind of juggernaut, where the engine that drove a lot of the growth, still looking strong, but not up quite as much, only up 4.1% year over year. ETF options looking slightly better in terms of growth percentage, up 6.4%. Once again, Dan, the engine of growth out there, single name equity options, they've gone from 521 million last year to 645 million this year. So quite the banger. It's up nearly 24%. Dan, what does that say to you in terms of so much explosive growth in just a year and all the single name stuff, sir?
I know. I guess people are, they're catching on, I was just writing something the other day, just talking about how options used to be considered like an alternative investment, this different esoteric thing. And now it's like they're super mainstream.
Yeah, one of the concerns has been, that single name equity flow is usually seen as a bellwether for retail. Obviously, retail's trading 0 day as well. But, up 24%, it's hard to argue that we're not seeing a bit of a comeback of the retail. Some of that, of course, a year ago, we were starting to see, I think it was March of last year, where we saw all that roaring kitty stuff kind of come online, which seemed to energize whatever wave you want to call it, whatever number we're on, meme 2.0, meme 3.0, whatever the case may be. But that seemed to energize a lot of the retail traders back into the single names. You've also seen the continued dominance of NVIDIA and some of these other names out there, Tesla. And so it's been interesting to watch a lot of those hot names lighting it up. We talk about a lot of that flow on the option block a couple of times a week, listeners. Yet another reason why you should be listening to the full network out there. So does that mean, listeners, up 24%? Does that mean, retail never really went away? They kind of maybe hit the pause button in 2023, which is not exactly surprising. It was a bit of a turbulent year out there. Are we seeing the comeback of retail equity options traders? Also, if we keep up this level, this is the new bar, the new floor for options volume, 1.1 billion contracts. Then you're talking we're on pace for over 13 billion in a year. We just broke 10 a year or two ago. So this is crazy. We're also seeing a lot of flow coming out of these derivatives incorporating funds out there. They're driving a lot of flow as well. So a lot of factors are driving this. By the way, VIX futures also looking a little bit robust. They've kind of been a weird dark spot month where everything else is up and VIX futures are down. February, VIX futures almost 4.6 million contracts, up about 7.4%. So again, interesting nuggets out there. Are we seeing the comeback of retail equity options? I think the answer is yes to that. And then, of course, the other question now, Dan, everyone has is index options up only. I put an only in quotes, 4.1%. Does this mean the 0 day trend is slowing, Dan?
I don't know. Well, I don't know about that, but one thing in options is that volume begets volume. And so maybe when everybody got really excited about 0 DTE options, we got new entrants into options and they ended up spilling over into equity options. It's a plausible theory, I think.
It is plausible. People are pointing out some other nuggets as well. Scott on our Pro Q&A this week saying we're having more sell-offs in the market now. We're not seeing as many downturns in 0 day volume. It was a big talking point last year on August 5th when 0 day volume almost dried up back on August 5th for obvious reasons. We're not seeing as much of that now. Obviously, we haven't seen as big of a drawdown as we saw back on August 5th, but still 0 day traders getting a little bit more skin in the game, a little bit more experience under their belts, not quite as shell-shocked when we see a red day out there. So kind of interesting. We are seeing a lot of 0 day out there, but it's obviously seeing a lot of uptick in single name equity options out there. I'm curious for you listeners, what do you think these numbers mean overall? We on pace for 13 billion plus contracts this year? Do you think this is the comeback of retail, or maybe they never really left? Maybe they just kind of hit the pause button back in 2023, spooking a lot of people out there. And also, what do you think is up with 0 day index options? They're still going strong, but net growth in index options not quite as robust as it was. So hit us up with your thoughts as we keep on rolling. Speaking of your thoughts, it's time to get a little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
Our chat is excited for the triple header. Yes, you should be. Going to be a banger day. In fact, if you liked with Jamal joining us from Tasty last week, he's going to be joining us in a little bit, joining me, I should say, on the Futures Rundown immediately after Options Bootcamp today. So another reason why you should be subscribed to the Pro, or at the very least listening to the full network wherever you get your podcast, because you'll get a good taste of Jamal answering some of your questions about futures. I think we're going to go deep into crude oil coming up on Futures Rundown, but that's a conversation for another day. First, let's kick things off. It's mail call time, and you know what? We've been deprived of these for a little bit. You folks are champing at the bit for a little bit of the old market taker question of the week.
And now, it's the moment you've been waiting for. It's time for the Market Taker Question of the Week.
All right, Mr. Dan, what you got for us this week, sir?
All right. Well, I think I mentioned this on the show last week or recently. I'm under contract with Wiley to write another book, and it's going to be on covered calls and cash secured puts. So consequently, I've been doing a lot of talking about that. And I got a question. What are the key metrics for covered calls? And so I updated my spreadsheet. I call it my spread cheat because it kind of lays out all the things for all the different strategies that I trade and makes it easier for me to make good decisions on them. And there's a couple metrics. Static return, which is if I sell a covered call and the stock doesn't move, what happens? How much do I make? And you can look at that as far as a percent goes or as far as the dollar amount goes. The if called return, which is if the stock rises and goes through the strike price and I get my stock called away, how much do I make? And I like to look at that in dollar and percentage terms as well. And then, of course, your break even, which we are probably, that one probably everybody knows. And what I call the tracked cost discount effect, which is like they say covered calls lowers your cost basis, but I don't like using those words because I think it can be misleading. People might think that that means like on their taxes, they can do that. So I call it the tracked cost discount effect. How basically, you know, if you sell a $1 call on $100 stock, then if you skate on it, you effectively own the stock for $99, you know. And then the indifference point, which is the point where, like, if the stock really blasts through your call strike, a lot of times you can feel like, oh man, I left money on the table. And you can calculate what's called the indifference point. And that is the point where if it's below there, you're glad you did the covered call. And if it's above there, you wish you didn't do the covered call. That's probably the least important metric. I encourage people to really not focus on that one, but yeah, that is what I have. And I'll tell you what, I actually put that spreadsheet in my Substack, and I offered that as a bonus. And anybody who's listening to the show, if you become a paid subscriber to my Substack, which is just wealth building with options at Substack or .substack.com. If you become a paid subscriber and you put in one of the comments, send me the spreadsheet, I will send it to you for free. So it's a free kind of secret bonus. I don't post that on the site, but now that you're listening to it, you've got the offer. And so please, I mean, the real reason to become a subscriber is because I give interesting content, but that little bonus is definitely worth its price.
There you go. Check out the bonuses out there, listeners, over there on the Substack. Speaking of, Dan, your thoughts. We've been obviously a lot of people, as we're recording this, listeners, we're recording this in early March. We've seen a lot of dust-ups in the market on the backs of tariffs. A lot of aggressive intraday swings. VIX cash getting quite spicy. Got up to about 26, I think. Coming back down the other side of that right now, down to only, I put only in air quotes, 22, as we're seeing yet another whipsaw out here in the market again today. Yesterday, S&P selling off to around 57.30 before bouncing hard off that level, rallying nearly 100 points in the S&P. Saw something not that dissimilar today, folks. Spooked coming out of the State of the Union about doubling down on tariffs. S&P selling back off to a little bit shy of 57.5 before now rallying about 100 handles intraday, listeners, to about 58.5 right now. So it's been wild out there, Dan. That goes right to our question of the week, which is quite simply, we're seeing a little spice in the market right now. Do you think this has legs, or is this just a dust-up? Can't talk today, Dan. Is this just a dust-up? Quite simply, where do you think VIX will close at the end of March? Will it remain spicy, Dan, north of 20, or will it stay a little bit more mild below 20? Or is this just too spicy for you? Are you going to cash? Dan, what are your thoughts on all these wild intraday whipsaws we're seeing? And then B, where do you think our audience is lining up? They think VIX is going to close above or below 20, or are they just going to cash?
I think that the VIX is going to close above 20 at the end of March. And I also think that the majority of our listeners think that too. And I say that because apparently the next time that the tariffs are going to be addressed is the very beginning of April. So, I mean, I feel like we're just in a period of volatility until then. I mean, unless somebody makes some sort of deal in the interim or something like that. So I don't know. Yeah, I think we're going to be above 20 at the end of March. We might dip below it here and there, but I think vol's just going to be high for a while.
So you're saying north of 20, Mr. Dan. Let's see what our audience is saying right now. Listeners, again, this question is live. You could find it over there on our Twitter, Dan. And you know what? Our audience disagrees with you, Mr. Dan. A rare break from the black-hatted one right now. 53.6% say we're going to be a little bit more mild, below 20. 39.3% say we're going to stay spicy, Dan, above 20. And 7.1% say, you know what, it's too spicy for them. They're taking their ball and going home. They're going to cash, maybe hoping to buy some new, do a little BTFD at a much lower level out there. So interesting stuff. That's live right now, listeners, over there at Options to make your voice heard. Of course, if you're listening down the road, as I know many of you are, you can always play along with whatever our question of the week is right now. Dan, we also have a crypto show on the network, the Crypto Rundown. It became a very contentious episode this week over this very hot button topic. Over the weekend, Trump and company sending the crypto markets into a tizzy over the notion of a strategic crypto reserve. Markets got really hot, they popped, and then they almost immediately faded and started selling off. So we put the question to our audience, Dan. I'm going to put it to you right now as well. Quite simply, do we need a strategic crypto reserve? Heck yes or hell no, Dan? Which way are you going? Which way is our audience going?
I'm going a pretty strong hell no, and I'm thinking our audience is going to go that way too. I mean, I don't understand what the point is. That's just plain weird.
We had your buddy Mr. Scott Nations on the Pro Q&A yesterday. He said, we're not arguing for a strategic equity reserve to buy shares of NVIDIA and Apple. Why should we buy Bitcoin? And you know what? Our audience agrees with that sentiment, and with you, Dan. Nearly 70%, 69.7% saying hell no, 30.3% saying heck yes, and that 30.3%, Dan, obviously hold a bunch of crypto, and they like the nice pop they get whenever they hear about strategic crypto reserve. Get out there, listeners, and make your voice heard if you have thoughts about what should be in it. Obviously, that enthusiasm faded pretty quickly, so a lot of our audience was not feeling the love for that, or at least they didn't like the way it was structured, taking a lot of the, let's say, assets that were seized from raids on outlets like Silk Road and turning those into a strategic reserve. I think a lot of the crypto heads thought it was going to be the U.S. government on the bid on Bitcoin, hence driving up those markets. And that's what they were looking for. I think the way it unfolded, also the inclusion of maybe Cardano and a few others that some folks took issue with. Maybe that also dimmed their view on it. Kind of interesting to me that you would argue for Bitcoin and not some of the others. But hey, it's obviously a contentious thing. Our audience right now coming down firmly on the no side. Where do you fall, listeners? You want a little bit of the government buying a little bit of the old BTC and a little ADA and a little SOL, or no? Hit us up. Let us know. Right now, nearly 70% of you saying no. And Dan, you brought this up on the option block with your nemesis in life, Mr. Uncle Mike, on Monday. So I thought I would give you the final results. You brought up this size call spread going up on Monday in Carnival Cruise Lines. It was the March 25-28 call vertical. That paper sold, I think at the time, it was about 8,000 times. I think a total maybe of about 11 or 12,000 on the day for 52 cents. You were kind of a fan of that bad boy. So we thought we would ask our audience, are they also down with selling that? Are they a seller? Are they a buyer at that price? Are they not interested? And Dan, exactly half of our audience, 50% saying they wanted to sell it. About 25% each saying they wanted to buy it or they just weren't down with trading a little CCL. So Dan, what do you think? Our audience, at least exactly half of them, wanting to get on board. Did you trade that bad boy as well?
I did. I traded it, and I closed it already for like a 60-some% of maximum profit. Played it pretty conservatively just because it's a weird market. In hindsight, didn't really have to worry. Could have held it all the way to all the way till today anyway. But yeah, I liked it at the time, and it worked out. So can't complain.
Yeah, it looks like Carnival taking a bit of a drubbing since we talked on Monday, Dan. So that selling of that spread, I should say, working out there, listeners. Did you get on board? Did you sell that for 52 cents? In which case, you could have bought it back for a lot less, which is always the goal out there. Let's look at a couple other questions we asked you last week on the show. 24-hour trading making the headlines again. We discussed this with Jamal on the show last week. Quite simply, we asked you last week, should options trade around the clock? Heck yes, hell no. Or the hardcores, they don't forget 24/5. They want 24/7. And Dan, 45.1% of our audience said, heck no. Which you might say, okay, our audience doesn't want it, but that's down from last year when it was close to 70% who said no. And then B, if you add together heck yes, which was 39.2%, and then also the folks who want full 24/7 trading, which was 15.7%, now you're talking about 55% of our audience there. So the majority, Dan, I guess, do want it now, which is surprising. A bit of a sea change from a year ago, Dan. What are your thoughts?
Yeah. It's interesting how ideas like this just change over time. I don't know. It's strange. I don't even know what to say, to tell you the truth.
I think big outlets like Schwab and others just hitting them over the head with it. Robinhood, obviously, as well, saying 24/7, 24/7. Folks, also, a lot of folks see the crypto market 24/7. They see futures going closer to that route. It is probably, at the end of the day, inevitable. But it is also, Dan, very much a careful what you wish for type of scenario. And look what happened on the crypto markets over the weekend. You'll be glued to your trading screens and or your phone, listeners, if this goes live in the options world. So hopefully you're down for that. It is kind of weird to me, Dan. We see such interest in zero-day options, and a lot of that is driven by the fact that folks don't want overnight risk. That's the driving force for them trading those things. And then we have so many people also who want 24/7. It seems to me, Dan, like two diametrically opposed forces going at it in the options market, sir. What do you think?
Well, that's kind of like what the stock market is, right? Some people want to buy this stock, some people want to sell that stock, and that's where you get a trade, right? So, differences of opinions makes the world go around, makes the market go around.
Speaking of your opinions, listeners, last week we asked you, again, going back to crypto. It's been a wild time out there. You should be checking out the Crypto Rundown if you're not listeners. That's a hot one on the network these days. If you had to buy and hold one crypto asset for the rest of the year, gun to your head, which one are you choosing? Bitcoin, ETH, Solana, or the infamous other? A lot of you wrote in for Doge, and for Monero and a bunch of others out there, a bunch of other altcoin. But at the end of the day, Bitcoin took it 67.9%, followed by Solana 13.6%, and then ETH bringing up the rear out there at 11.1% out there. Listen, if you listen to our futures rundown in a little bit, you'll hear why ETH has been on the bottom of the list. Only 7.4% for other. A lot of hot questions of the week live right now, listeners. Get out there and make your voice heard. That's going to do it for Options Bootcamp for this week. But if you're hanging out in the pro, you don't have to go anywhere. It's not going to end your Education Wednesday because Dan and I are coming back hot and heavy with another episode of OBC in your ear holes. In the meantime, you know where to go. If you want to check out the folks who are helping bring the show to you this week, head on over to TastyTrade, tastytrade.com, the place to go to kick the tires and light the fires. Tell them we sent you. They'll be very happy to hear from you. And Mr. Dan, if folks want to check out your Substack, hit them one more time, Dan. Where should they go? What should they do?
Yeah, come over to wealthbuildingwithoptions.substack.com, or just go to Substack and search for Wealth Building with Options and be one of our subscribers. We've got like 9,000 something subscribers right now.
There you go. Head on over to the hottest new thing. Everything old is new again. It's 2017 again in the world of options, listeners. The Substack is hot. Dan's there, Russell's there, a bunch of people are over there on the Substack now. Hit him up over there on his Substack. He'll be very happy to see you over. That's going to do it for us in episode 1, but back immediately in your ear holes for all you pro folks with episode 2. For the rest of you, we'll see you back here next week, another episode of Options Bootcamp. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, TastyTrade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, TastyTrade's got the most advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named TastyTrade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/ride with us and see for yourself. TastyTrade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.